Hi all, welcome back again to Invesfinc on this Friday morning. Yesterday, all the major indices gave a breakout. Banknifty and FINNIFTY are its all-time highs. We had exclusively covered this in our yesterday's pre-market report and mentioned clearly that we are expected to cross the resistance zones in yesterday's weekly expiry. Well, in today's video, we will explore how to trade these markets. Let's unlock the key support and resistance zones for Nifty, Sensex, Banknifty and FINNIFTY indices. We will also dive into the stocks that made headlines on Thursday. So stick with us to the very end for our exclusive analysis on whether their momentum can continue and how you might approach them in today's trade. Before we jump onto the details, please go through the disclaimer. Now let's begin with the analysis on indices. So first up, Nifty 50. So in yesterday's trade, there was a flat opening and from there a significant green candle we could see. There was a jump of around 304 points and we rose around 1.21%. So we have already crossed the significant resistance zones what we had previously notified about 25,200 levels. So now we are at 25,500 levels, which we had notified yesterday. On the weekly expiry, expect a lot of volatility to be there and a one side move is expected to come in, and exactly the same thing had happened, and now we have closed about 25,500 zone, which would act as a round level as well as a support for us. Now what next? So since we are on a trending mode, so we could very clearly see there is a higher high and a higher low kind of pattern that is getting created. So as long as this pattern doesn't break, we should continue to go ahead with the longs. So what could be the expectations? So from here on, for the next weekly expiry of 3rd July, we might expect Nifty to approach towards 26,000 levels to 26,200 in the coming days. So as long as 25,500 remains intact, we can continue with the longs. So for us, the immediate maybe long-term kind of support is going to be 24,500 and a short-term kind of support is going to be 25,400 levels. So below these levels, if you see Nifty trading, that would act as a trigger for you to cut short your long positions. Until then, continue with the longs. Next, we will see from the perspective of open interest. So as you could see, this is the first day for the 3rd July expiry. We already see significant open interest built up in yesterday's trade on the put writing until 25,500 levels. So as you could see, 25,500 levels, only yesterday it got initiated and 90% of open interest built up was taken at 25,500 levels, and at every 100 levels, as you could see, significant open interest additions has happened. So for us, 25,000 remains as a strong support, and then beyond 25,500, if it sustains for like a day or 2 days, then we are headed towards 26,000 levels. So the immediate resistance is going to be 26,000 levels. So beyond 25,600, we will see 25,500 calls will get a jolt and they would start unwinding their positions. So Nifty is very clear, indication it has given to head towards 26,000 levels in the coming days. PCR stands quite strong at 1.3 overall, and at the money is 0.93, which is again positive. Moving on to Sensex, even Sensex had given a big green candle, and this is quite positive because yesterday we had discussed that we have to cross 83,000 on Sensex. So in fact, we opened flat around 82,000, 882 levels, and from there one single up move that we had continued to see without any downfalls in the intraday. There were proper supports where the Sensex had taken, and then from there we just continued to move higher. So we have closed at 83,755 levels, and there was a 1,000 point move in the intraday trading session. So this signifies that we are on a continuing uptrend, and this uptrend will continue beyond 84,000 to 84,500 levels, at least in the short term perspective. So what trades are we expected to take? So for us, 83,000 should act as a immediate support on Sensex, and then we should continue taking the long positions until 84,500 to 85,000 levels in the coming days. So for us, the long term support is going to be around 80,500 levels. If you see Sensex falling below those levels, then that would act as a trigger for us to go shorts. So till then we might hover in this range for a short term perspective. Now let's move from the open interest. On open interest, we could see 83,000 levels hold significant positions from the put writer standpoint. On the call writing, major positions we are only seeing at 85,000 levels, so that would act as a resistance. So as long as we sustain 83,500 levels in at least 2 to 3 trading sessions, then we are headed towards 85,000 in the coming days. So we have at 84,000 and 84,500 levels also good amount of call writing, but that may not sustain with the kind of positive momentum that we are seeing in the overall Indian indices. So PCR stands at 1.6, which is significantly positive, and at the money PCR is 0.85, which is again bullish. Coming to Banknifty, Banknifty has now achieved the all-time high levels. It moved in intraday to 57,263 levels and just closed at 57,200 in yesterday's monthly expiry. So overall there was a 1% move that was fantastic in Bank Nifty. Now what next from here on? So we had already set a target of around 57,000 for the monthly expiry in Bank Nifty, and in fact Bank Nifty approached towards those levels. Now for the next expiry, we have to gauge how the open interest positions are placed, and accordingly we can start taking the bets where the Bank Nifty is expected to head from here on. But with the kind of positive trend that we are seeing in all the major indices, even the banks will support in this kind of overall rally, positive rally. So we might see Bank Nifty again maybe approaching towards 58,500 to 59,000 levels in the coming days. So let's see quickly from the perspective of open interest what we can analyze. So on the open interest at 57,000 levels, we have good build up from the put writers, so that would act as a support. The major positions have been held at 56,000 levels in Bank Nifty, because 56,000 levels in the June overall expiry also had held strong. So despite we were approaching below 56,500 levels, still the open interest positions on the put writing were not sold off or unwound. So that itself was a proof that Bank Nifty is not likely to move down anytime in the June expiry. So from here now we should continue acting this as a strong support for us, and then any trades above 57,000 levels would give a cushion for us, and then we should continue taking the long positions until 58,000 and next 58,500 in the coming days. So let's see, let the open interest get built up, and accordingly we will initiate the positions. So PCR overall is at 1, which is positive. At the money is also 1.03. Now next is FINNIFTY. FINNIFTY had again hit the all-time highs, and we had very clearly mentioned in our yesterday's pre-market report that we are expecting FINNIFTY to close or sustain 26,600 levels. And in fact in previous day's trade as well as in yesterday's previous to previous trade as well as in yesterday's trade, we had been about 26,600 levels. In yesterday's trade, we opened around flat 26,882 levels, gave a high of 27,278 levels, and ultimately closed at 27,250 points. So now there had been a jump of 1.48%, highest among all the major indices. So all the NBFC as well as financial services stocks have been on a rising uptrend. So this is evident that from here on we are headed towards 28,000 levels in the FINNIFTY in this July month's expiry. So what should be our immediate support? So the support is expected to be at around 26,600 levels for us, from where we had significantly broke out. Now the long term kind of support is going to remain at 26,000 levels for us. So any point in time, if you see Banknifty trading below these zones, then we should cut short our long positions and be on sideways or a kind of consolidation mode, or we might head towards sell off. So as long as 26,600 is intact, we should continue with the long positions. Now let's see what the open interest suggests. So open interest at 27,000 levels have been built up both from the call writers as well as put writers, but put writers have been winning on this, and in just one single day there have been huge open interest additions that have happened. So now that we are above 27,000 levels, so we have to see how the trend is expected to get created. We already see at 27,600 levels there have been significant open interest built up that has happened, and at 28,000 we see call writers who have taken the positions. So as long as 25,200 to 100 levels remains intact, we can continue with the longs with a positive note that with the overall kind of trend in the indices what we could see, the trend would also support the FINNIFTY. So PCR stands at 1.1, which is quite positive, and at the money is also 1.03, which is overall bullish. Now the next segment for us is what the market participants had done. So first is FIIs. So on the index futures, they have significantly cut short their short positions, and 72,000 contracts have been added. So overall now they are just holding 34,000 contract in shorts in index futures. On index options, negligible positions have been held from there. Again, they have cut short their short positions with 20,000 contracts that had been added on longs. So net positions is just 3,500 shorts in index options, which is not at all significant. Proprietary traders, on the other hand, on index futures have been holding the short positions with 12,309 contracts. They have added or just alone in yesterday's trade they have taken significant positions from longs to they have went short in index futures. On index options, they have been continuing to hold the long positions. So overall they were quite positive with 2 lakh kind of contracts in yesterday's trade, but previous to yesterday's trade. But in yesterday's trade, they are still holding 1.12 lakh contracts in longs. So as long as proprietary traders are long, because we have been seeing that they are on a positive uptrend mode. So the way how the proprietary traders have been taking positions, it is helping out them in the huge profits with the market gains. Now clients or retailers on index futures, they are longs with 19,000 contracts. So overall, roughly around 55,000 contract longs were held until yesterday, day before yesterday, and in yesterday's trade they have cut down their long positions with 37,000 contracts, but still 19,000 contracts are being held in index futures. On index options, they have um, cut short their short positions by 70,000 odd contracts, but still hold 93,615 contracts in shorts in index options. So we have to see whether it is client or retailers who are expected to win, or the proprietary traders. Of course, institutions majorly will have the clarity, the money, and also the vision as to in terms of well informed news they would be having, and a vision as to how overall the market participants across are expected to trade. So weightage can be given for the trades or positions what proprietary traders are holding. Now on the cash market, DIIs have started to sell off or liquidate some positions in the cash market. So there was a 200 crore sell off yesterday that we had seen. However, FIIs have significantly pumped 12,600 crores in the cash market in yesterday's trade alone, and that is when we had seen a big jump coming in, and the credit all goes to the FIIs. So now, as long as either of the institutions are long, there is nothing much for us to worry. And FIIs have been on the sideways for a very long time, and now they are pumping in money at the higher levels. So this momentum or rally is expected to continue at least until 26,500 levels. So stick with the trend and let's continue. Now the next very important segment that we are going to cover is the buzzing or trending stocks. First up is TI India. So as you could see, there have been a jump of around 5.22% in TI India, which is the flagship company of Murugappa Group's engineering. So in yesterday's trading session, we closed at 3005 levels in yesterday's trade. So the key catalyst for this upward movement was a series of media reports that indicated the Indian government is actively considering a new 13,000 crore incentive package for the auto parts sector. So this proposed scheme is reportedly based on the recommendations from the government's think tank NITI Aayog, and it would be separate from the existing production linked incentive scheme. So the main points or objectives of the new package is to bolster the entire value chain, reduce the import dependence, and then promote local manufacturing of the key automotive components. So as a major player in the auto ancillary, TI India is expected to get a huge chunk or benefit out of this move. And since TI India has quite huge potential, that is when the stock had or the investors had been continuing with the buying momentum. So the fresh prospects or the incentives what are expected to come in for TI India is a way of positive sentiment and a renewed buying interest in the stock, along with other companies in the auto component space. So overall, it was considered as a positive note for the auto ancillary parts or the auto sector overall. So this stock might continue to move uptrend until these levels, 3,200 odd levels, because we see a kind of resistance there. And as you could see, for almost like a month's trading session, it had been on the short side, and it had taken a support at these levels, and from there we had seen a significant recovery just in one single day trade, and that had come with the huge volumes. So the expectation is that this trend might continue until 3,200, which is roughly around 200 points from here. Maybe another 5 points we can expect. 5%, sorry. Now next is Prestige Estates Limited. So we had seen there was a downfall of around 2.84% in yesterday's trade and closed at 1699 levels. So 50 points downfall we had seen in Prestige Estate stock. So the primary cause for the drop in Prestige Estates, along the others in the sector, was the release of the downbeat industry-wide data that raised investor concerns about the near-term outlook. So the Nifty Realty Index was one of the few sectoral indices in yesterday's trade to end in the red, falling by approximately 1%. So yesterday was overall positive kind of trend that we had been seeing across the major indices, but realty sector was trading opposite. So two key reports appeared to have dampened the investor spirits. So one is sharp drop in the housing sales. So a report by real estate consultant Anarock Research indicated a significant 20% year-on-year decline in the residential property sales across India's top 7 cities during the second quarter from April to June of 2025 calendar year. So this is negative. Second, there is a decline in the private equity investment. So another report from the Knight Frank India revealed a steep 41% year-on-year slump in the private equity funding into the real estate sector during the first half of 2025. So these are two major news or maybe reports that had concerned the overall real estate sector, and that is when none of the stocks in the real estate space were trading positive in yesterday's trade. So we might see maybe a shift coming in from the investors moving from real estate space to other sectors, because we have been seeing a one-way rally that is appearing on overall Nifty or Sensex for that matter. So there might be some change of hands that would happen, or rotation of sector. So let's remain cautious and see what next is upheld for reality space. So as of now, if you could see, we had been inching on the towards the highs, and then there was a sharp downfall, and then we recovered from here, and now we are again heading towards the continuation on the downtrend basis. So now this might hold a significant trade for people expecting the reality space to go down. So there might be more shorts that would get created at these levels, because it is very clear indication that this is how the market is expected to continue from here on. So let's see and track maybe the reality space. So that's it from our end. If today's analysis brought any value to you, don't forget to hit the like button and share it with your fellow traders. For all the daily pre-market report updates, make sure to subscribe and tap the bell icon so that you never miss an episode in future. You can also join our Twitter and Telegram channels. Link is given in the description. Thanks for watching, and we will see you in the next video in the next week.